One of the biggest criticisms of cryptocurrencies is that they're highly volatile. Fiat maximalists trumpet their horns when pointing out the wild price movements of crypto. However, stablecoins destroy this narrative, as their whole modus operandi is stability. My name is Guy, and in this video, I'm going to be taking a look at the best stablecoins to currently stash your sats. Now, as is always the case, I need to stress that what follows is not financial advice. I encourage you to speak to your advisor before investing in crypto, stablecoins or otherwise. And if you're new to the Bureau, then I suggest you tap up that subscribe button and ping that little bell. That way you can get these videos served fresh the moment they leave our crypto kitchen. All done? Great. Let's crack on. Now, for those of you who do not know, stablecoins are cryptocurrencies that are linked or pegged to a real-world asset. Most often, this is a fiat currency, like the US dollar, the British pound, or the Japanese yen. But they can also be tied to other assets like gold or oil. Stablecoins offer steady valuation and stability in a market that is prone to extreme changes from one day to the next. There are a few other purposes stablecoins serve, however. For example, since a stablecoin offers a predictable and steady value, it can be used for transactions just like a fiat currency. Many within the crypto industry view this as a significant step towards adoption. Additionally, since these coins have a stable value, it makes sense that they would be ideal for use for recurring payments. Utilities, rent, and salaries are all ways stablecoins can be used. This is in contrast to the volatility of other cryptocurrencies, which makes it difficult to make regular payments since the value can change drastically from one month to the next. Heck, even from 1 minute to the next. Stablecoins also offer investors a secure way to get into the cryptocurrency market without exposure to the volatility associated with the more standard cryptocurrencies like Ethereum and Bitcoin. Additionally, stablecoins with fiat backing provide investors with the opportunity to trade on crypto-to-crypto platforms without the need to first buy a major cryptocurrency. Now that we have a solid idea of what a stablecoin is, let's take a look at some of the more popular options, at Tether or USDT. Tether was one of the first stablecoins and remains one of the most popular. It's usually in the top 5 in terms of market cap and has extensive market liquidity. If you really want to get an idea of how popular Tether really is, take a look at its daily volume. It does hundreds of millions every day, which exceeds the vast majority of other cryptocurrencies. This is because Tether is perhaps one of the most popular stablecoins to trade other cryptocurrencies against. It's much easier for an exchange to list a Tether order book than a US dollar order book. It's also a great trading pair for US dollar price discovery. The price in Tether is the price you will get the crypto for in dollars. What's interesting to me is how popular the coin remains despite the controversy that surrounds it. For example, earlier this year, Tether's own lawyers admitted that the company only holds 74% of its outstanding Tether. There are also questions surrounding the coin's connection with Bitfinex. Many of the founding directors of Tether are reportedly also directors at the popular crypto exchange. Now, even amidst these concerns, there are still a variety of reasons why traders prefer to use Tether. For starters, despite some trying times in 2017 and 2018, it's always managed to bounce back to the dollar peg. Mispricings opened up arbitrage opportunities which quickly closed said mispricings. Additionally, as I mentioned, the coin does plenty of volume. As a result, there's no shortage of liquidity. It's easily the highest among stablecoins. That means you can trade it with limited slippage despite the order size. It's also pretty easy to send with relatively limited transaction fees. This is because Tether recently migrated from the Omni network layer to the Ethereum blockchain. Hence, a large proportion of the outstanding USDT are ERC20 standard tokens. Oh, and this also means that you can store Tether just like the other stablecoins I mentioned above. Of course, there are drawbacks to Tether as well. We've mentioned some of the controversy that surrounds the company. However, that doesn't seem to be much of a deterrent to the vast majority of traders. Similarly, USDT requires KYC and AML identification for fiat conversion, so not the best for privacy hawks. I want to conclude now with a few final thoughts. What stablecoin you decide to use will really come down to your own personal preferences. Do you want liquidity over decentralization? Do you want ease of conversion over privacy? I myself am a big fan of Tether. And that brings to a close my stablecoin review. What do you guys think though? Which stablecoin do you swear by? Are there any others that you think should be included on this list? Let me know below. Also, if you found this helpful, then help support the channel. Smash up that like button and don't forget to subscribe. Adios, amigos!